Warren Buffett doesn't require an introduction. The importance of having businesses with strong, long-lasting competitive advantages that can provide consistent revenue and profits over the years has been repeatedly emphasized by the Oracle of Omaha. The Warren Buffett-owned company Berkshire Hathaway is well known for not paying dividends to its investors since 1967. Fortunately, Berkshire Hathaway is still successful and earns dividend income from its investments totaling billions of dollars. Moreover, half of the stocks in Berkshire Hathaway's roughly $300 billion equity portfolio pay dividends, despite the holding company not doing so. The best Warren Buffett dividend stocks also produce a large income for the Oracle of Omaha. Long-term investors may see outstanding total returns with the top dividend equities, such as Berkshire Hathaway. Over the last 10 years, BRKB has generated a total return of 13.1% in contrast to the 12.6% total return of the S&P 500 index. Additionally, during the preceding 3 months, which were characterized by high market volatility, BRKB's total return was 10.8%, or roughly 11% greater than the whole market. BNSF has given Berkshire Hathaway $41.8 billion in dividends, which is a sizable sum. However, the railroad only pays us what is left over after it meets its business needs and keeps a $2 billion cash reserve, in a letter to his shareholders, Buffett said. This conservative approach enables BNSF to borrow at competitive rates, independent of any Berkshire guarantee of its debt. Warren Buffett has grown as an investor since starting his first business in 1956. Due to the fact that his portfolio was much smaller at the time, Warren Buffett was able to search out the biggest market inefficiencies. He put a lot of effort into finding stocks with modest values. Buffett stated that if the odds were deemed to be significantly in his favor, lowering risk, he would be glad to invest up to 40% of his net worth in a single security. He was unafraid to have one investment account for more than 25% of his total holdings. Over 40% of Warren Buffett's remaining concentrated assets at Berkshire Hathaway are made up of Apple. The foundation of a concentrated portfolio is the belief that there are typically only a few elite businesses and investment opportunities accessible, and that having too many holdings lessens the impact of your few best ideas. It's important to remember that Warren Buffett has always underlined the value of working within one's expertise. Buffett stated that risk comes from not knowing what you're doing. In other words, stay away from investing in industries or enterprises that are too complicated to understand. In reality, the bulk of investing opportunities fall outside of our area of competence and should be ignored. Since his initial partnership, Buffett's strategy has evolved, now focused more on buying great companies at reasonable prices than scouring the clearance rack for cheap stocks. He looks for companies with significant openings for growth and strong financial buffers. According to Warren Buffett, while investing forever is his favorite holding duration, the objective is to make investments in top-tier companies with enticing long-term growth potential and watch as their value increases over time. For instance, between July and July 2023, Berkshire Hathaway's total investments should produce a $6 billion dividend payout. The following 3 stocks, which collectively represent about $1.5 billion of that total, are a great example of how investing in reputable, well-established businesses can give investors a strong foundation in a very volatile environment. Chevron, CVX. One of the most well-known energy companies in the world is Chevron. Like most gas providers, it saw record profits this year when gas prices rose sharply in the spring and summer. Warren Buffett increased Berkshire Hathaway's holding in Chevron by 2.4 million shares in the first quarter of 2022, placing a wager on the prosperity of the corporation. The most recent financial filings made by Berkshire show that it now owns 161.4 million Chevron shares, amounting to a $25 billion investment and an 8.4% stake in the company. Berkshire Hathaway is currently Chevron's second largest shareholder. Chevron pays Berkshire Hathaway $5.68 in dividends per share annually, which translates to $929 million in dividends from Chevron alone, and that amount will only rise if present oil and gas trends continue. Chevron has increased its yearly shareholder dividends for 33 years running. The current dividend yield is 3.5%. This year, Berkshire Hathaway increased its stakes not only in Chevron, but also in other energy companies. To give one example, in August, the Federal Energy Regulatory Commission approved Berkshire Hathaway's offer to buy up to 50% of Occidental Petroleum. To understand why Buffett chose to place his entire portfolio in non-renewable energy companies, look at your electricity bill. Buffett is betting that the gas industry will continue to have tremendous revenue growth for the upcoming quarters or years of ongoing global volatility, even if we can't be sure of it. Kraft Heinz, KHC. Ore-Ida, Capri Sun, and Lunchables are just a few of the well-known grocery store brands that are owned by Kraft Heinz, the third largest food conglomerate in the United States and the fifth largest in the world. Berkshire Hathaway largely oversaw the merger of Kraft and Heinz in 2015, which took place. Success for Kraft Heinz may have been achieved more easily, but according to Berkshire Hathaway's most recent 13F filing, which was released in mid-August 2022, the company currently has a $12 billion investment in Kraft Heinz. With more than 325.6 million shares, Berkshire Hathaway owns more than 26% of Kraft Heinz. Given that Kraft Heinz pays $1.60 in annual dividends per share, Berkshire Hathaway expects to receive around $521 million in dividends this year. In case you were wondering, Berkshire Hathaway paid Kraft Heinz exactly that sum in 2019, 2020, and 2021. As a result, even if the company purchased Kraft for too much, the steady dividend payments help make up the difference. The dividend yield as of right now is 4.3%. Mellon Bank of New York, BK. The Bank of New York Mellon Corporation, usually known as BNY Mellon, is a holding company with offices in New York that offers asset management and investment banking services. To create the current company, two of the oldest and most famous financial companies in the country, the Bank of New York, 1869, and the Mellon Financial Corporation, merged. The two groups merged in 2007, and a decade and a half later, it was clear that the merger was a success. By managing $2.2 trillion in assets, BNY Mellon is one of the biggest asset managers in the world in 2022. With a 9.2% stake in the company, Berkshire Hathaway is one of BNY Mellon's largest shareholders. According to its 13F filing, Berkshire Hathaway has 74.3 million shares with a market value of nearly $3 billion. In addition, thanks to BNY Mellon's yearly dividend of $1.48 per share, Berkshire Hathaway will receive about $110 million over the course of the next year. The current dividend yield is about 3.3%. The ownership of multiple important banks by Berkshire Hathaway was unaffected by the COVID-19 pandemic, but since then, the company has dropped a number of financial institutions from its holdings, most notably Wells Fargo, where Berkshire Hathaway had a 30-year investment. Buffett's sustained investment in BNY Mellon speaks much about the stability and consistent dividends of the business. When times are tough, it helps to have a steady source of cash flow, and that's exactly what Buffett has achieved with his three assets. And it's true that most of us don't require Berkshire Hathaway's enormous cash reserves or diverse investment portfolio. Nevertheless, it is a sensible financial move to follow Buffett's lead and invest in a small set of reputable, stable, dividend-paying companies. When making decisions, always take your investing goals and risk tolerance into account.